Welcome, friends. James Corbett here, CorbettReport.com. It's the 7th day of March 2013, and once again we are joined on the line for our regular monthly conversation with David L. Smith, aka the Geneva Business Insider. Once again, his blog is available at genevabusinessinsider.blogspot.com, which will be linked up in the show notes for today's interview. And we are going to once again delve into the real truth behind the market manipulations and phony economic data coming out of the mainstream mouthpieces, and the real truths behind the false prophets and false profits of the bankster world order. So, David, thank you for taking the time out of your schedule. It's always a pleasure to talk with you.
Good to be back again. Thank you.
All right, let's move right in this month, right into your neck of the woods, talking about the latest in Europe. And we did notice a little bit of drama playing out in Italy with the recent Italian election, and some surprises and some mixed results there, which actually caused a little bit of a worry as people once again realized that Europe is a problem. Although I do note that European stocks are back up to almost 4.5-year highs this week. So it looks like everyone's rallying around the Euro flag once again. But let's get your take on what happened there in Italy.
Well, Italy is a country I lived in for about 3 years. I know the language and the culture pretty well. My views are that the Italian people are very independent-minded. They tend to ignore their governments by and large because they've had so many it hardly matters. But now, unfortunately, with debt to GDP running at about 2 years and externally imposed austerity, the people are beginning to try and throw off the yoke of this sort of invading bureaucratic government, which they didn't vote for. Now, I would say for a couple of years, they've actually been relatively forbearing, and politically, for example, I think Berlusconi has been very smart because he was clearly sabotaged by the manipulations of the European Central Bank to put his government bonds into unacceptable yield levels, to create the excuse to effectively have a non-military but a banking putsch. So there's a wonderful saying in Italian which is vai davanti cretino, which means go ahead, idiot. And I think basically that many of the politicians have been only too happy that their present prime minister has actually had grasped a little bit of the nettle and is now the one who is left with the pain and problems. So for me, the thing I'm very optimistic about is the fact that there seems to be some sense that there should be a democracy in the country. And the rise of Mr. Grillo, who is not to be ridiculed as the economists would like to do it and call him a clown, he is anything but a clown. He's about as much of a clown as a George Carlin would be in America. He's smarter than the politicians. And he has one thing that distinguishes him from them remarkably, is that he's fundamentally honest. So now we have a situation where he has managed to get a number of senators elected who are supporting him. They do not have a machine or a structure to do very much. And now Bersani is trying, who's the centre-left party, is now trying to reposition to pretend he was a friend of the people all along, while at the same time trying to keep in bed with the powers that be in the EU and the ECB in the most hypocritical display I've seen. And then, of course, we have Berlusconi, who is the stalking horse of the story, who's looking forward to keeping out of prison and restarting officially paid-for bunga-bunga parties. But at the end of the day, it is what the people want. And I think the biggest misjudgment that is being made by the EU is that they can enforce things upon, major countries that have seen off much bigger and greater threats, such as Nazi Germany and many other things in their past. And their arrogance, unfortunately, is going to be the downfall of these bureaucrats in Brussels and Berlin.
Well, mainstream discourse always attempts to portray these types of political situations where there's no clear, decisive winner or decisive mandate for any particular politician as deadlock and, oh no, what will happen? But I tend to think of that generally as a good thing, because I tend to think of governments as more of an inflicting pain on the markets rather than doing any good. So perhaps it's a good thing to have that kind of political deadlock. But what do you think is going to be the short-term payoff for this in terms of the Italian economy and Italian bond yields?
Well, I think the Italian economy has always survived extremely well without the politics. I mean, if you take northern Italy, it is one of the most powerful industrial regions of Europe. It matches anything that Germany can provide. Milan and the surrounding areas. South of Rome, obviously, it's very different. And as far as the bond years are concerned, I mean, I think this time it could actually turn against the powers that be if they start playing around with the bond market, because it will be the perfect excuse for people to say, look, once again, the game has begun. Once again, they're trying to play the same trick as 2 years ago. And perhaps this is the time to say to them, go to hell, we'll go back to the lira, we'll reestablish our country as a sovereign country, and we'll get rid of them. And this is something that Berlusconi has already said very clearly. They have a printing press in Italy. And if the price of freedom in Italy is to turn on a printing press and say goodbye to Europe, then I think that's a pretty low price to pay, especially when you walk away from 2 years of sovereign debt.
Well, once again, it is at least on the table and entering into the discourse that Europe is still on the brink in many ways. And I don't think anyone who's been watching our programs or watching the Corbett Report for any length of time will be surprised by that. But it's interesting how this rears its head from time to time and then gets smoothed over by more paper promises from the ECB. Speaking of which, a couple of big meetings coming up, I believe tomorrow or later this week at any rate, both an ECB meeting and a Bank of England meeting. So that might throw some monkey wrenches into the works. But why don't we turn our attention to the other side of the world? Since we last talked, the BOJ finally resolved the issue of the governorship, and the Shirakawa era is ending in Japan, as the new governor is going to take over Haruhiko Kuroda, who was formerly the president of the Asian Development Bank. And it looks like this is really just a continuation and fulfillment of what Abe has been promising since he came into power in December. What do you think going forward is going to be the case here with the Bank of Japan generally, and even broader in terms of the other central banks that are carrying on with this debasement of the currency in the quantitative easing era in lockstep?
Well, I think basically the Bank of Japan has thrown down the gauntlet to the others, saying that we're going to print into oblivion. And the only difference between us and you is we expect to do it first and faster. So this must be of major concern to the other economies around the world. I mean, Germany at the moment has a relatively strong euro because that's the price to pay of pretending that the Eurozone is reasonably stable as it strengthens the currency. So now they're going to have to start saying, well, yes, it's strong, but not really. It's a little bit weaker than Japan. So, I mean, it's like a kindergarten game. It is really pathetic to watch major nations think that the only solution that they have is to turn on a printing press. As for their choice of candidate, I mean, frankly, I'm not hugely impressed, but as the new governor. But we will see. I mean, they're all completely out of bullets. The only thing they can do is print. I mean, there's some talk in some countries of having negative interest rates, which is legalized theft. At which point one should have to ask the question, well, why don't people just take their money out of the banks and at least know that if they have it under their bed, the $100,000 that will be there a year from now, instead of getting 95,000 back or whatever else it is. So the situation is really bad. I think for a brief period, what it will do is it will help Japan boost their exports. And the best period of all actually is right now, where they're actually not printing, but just threatening to do it. And as a result of that, the exchange rate is already going down very substantially. So this is, again, it's like schoolboy threats in the playground. You watch out, or I'm going to punch you on the nose. It's really at that level. The only trouble is behind it, they create inflation, they destroy the currency, they create ultimately unemployment, rising costs for the simple people living in any of the countries, in order for a very brief period of self-satisfaction.
Well, you were certainly right that basically their only choice is to turn on the printing press, but I guess it's the way that they do that, and there are some different options for how to get that money into the economy, and apparently one of the BOJ board members, Sayuri Shirai, proposed, and was voted down, but at least proposed the idea of moving up some open government bond purchases from that were planned for next year to this year. Even though it was voted down, it's seen as a harbinger of things to come when the BOJ formally reviews its policy later this year. So I think we're just going to see the straightforward injection of yen directly into the economy. So again, we've seen the gold price spiking in yen recently, and I think that's probably only going to be heading up from here if they continue this inflationary policy. But speaking of which, of course, this impacts all the countries that we're concerned with here. And of course, the United States, where the Federal Reserve is continuing its QE3 and 4 to the tune of $85 billion a month. And on that note, we've been hearing in recent months about the rebounding U.S. housing market. Apparently, the bubble has popped and now everything is growing once again. But there may be more to this story than they're letting on. Tell us about what's going on in the U.S. housing market.
Well, I did a very recent post to my blog on that subject, which I recommend to the listeners to go and have a look at. But essentially what you have is the National Association of Realtors coming out with their spin doctors, telling everybody that the market is recovering. And of course, to do this, they come out with the fact that prices are going up in certain areas, according to the Case-Shiller's study, which is about the only one which is reliable. And then after that, they try and suggest that there is a shortage of inventory of houses in the US. And kind of, if you don't buy now, the prices are going to run out of control and it's going to be too late and you'll be in the street. Well, the only comment I would make to that is there are many people who are going to be in the street, but first of all, it's not going to be guys buying the new houses, it's the guys who are being foreclosed on in their existing ones. And if you do the numbers, there are about 130 million homes in America. 75 million are basically owner-occupied. There are about another 40 million which are rented. And at the end of the day, by the time you've eliminated second homes and so on, there would appear to be roughly 10 million homes which are completely vacant with no one actually wanting to claim possession. Now, these may be McMansions or, log cabins in the middle of Alaska, I don't know, but at the end of the day, there's a huge surplus there. Secondarily, there is also the issue of foreclosure, and there's about 15% of houses, I believe, which are either partially delinquent, seriously delinquent, or actually in foreclosure. And the banks have been slowing down the foreclosures because basically they've got to take the losses if they close out the position. Even American banks can't lie about the fact they've taken a realized loss. So that's a problem. And then, of course, they are relying on the help of Ben Bernanke with his purchase of $45 billion a month of mortgage-backed securities to try and offload what remains on the bank's balance sheets and other institutional lenders' balance sheets of completely worthless debt, which is why the total of, among other reasons, it's why the total balance sheet of the Federal Reserve Bank has exploded from 1 trillion to over 3 trillion over the last couple of years. Now, the only other aspects I think that are important are where prices are rebounding. You'll find that the people who are actually paying for it, actually purchasing houses, tend to be major institutions, hedge funds, private equity funds, and very high net worth individuals. And of course, they're not going for the rundown places. They're going for very well located places where there's some investment to bring properties up to scratch. And as a result, they're able to get reasonable yields on that, while at the same time driving down the surrounding market because they're one step up in the food chain of quality. So the whole thing basically just does not add up as a recovery, because recovery comes from ordinary people having money and having jobs. And again, if you look at the student loan situation where you got $1 trillion in debt, the people who would normally be kind of coming into the workforce have got to pay off the student loan debt if they're fortunate enough to have a job, and by and large they don't. So, you know, the up-and-coming professional generation has been destroyed. There is no liquidity for them to put down even 5% deposits on property. Therefore, no one getting on the bottom of the ladder, therefore nothing to help push the rest of it up. And of course, you just need to look then at the unemployment figures in the US, the percentage of people in the workforce compared to the past, the fact that people are going to be returning and staying at home instead of setting up their own homes, and you have a recipe for, if not disaster, just a never-ending stagnation in the market, where there are only two people who actually pretend it's a real market, and that is Ben Bernanke, who wants to offload his problems onto the general public, and of course the National Association of Realtors, who are prepared to tell any lie in order to get their property sold. Not a very happy picture.
Not at all. And it's important for people to keep in mind when we're talking about the U.S. housing market that so much of the fraud and manipulation that's gone on in the markets generally has centered around the U.S. housing and real estate industry for the past decade during the build-up to the bubble and its popping and its subsequent aftermath. And I mean, we only have to look back at something like Foreclosure Gate, which was a massive scandal that was quickly swept under the rug with a payout and is never brought back to mind. And we're expected to believe that everything is smoothed over now. So it is, I mean, it does stretch the bonds of credulity to the absolute breaking point. But for people who are interested, I mean, what numbers or what figures or what stats do you think that people should be following to see where this is really happening? Because they are pointing to a lot of indicators that they say is, you know, housing starts, etc., is showing signs of going up. But are there any actual stats that people can look at, or are they all manipulated to the point of unusability?
I think there are a few statistics which are interesting. Maybe I didn't mention housing starts, but they are running now at 400,000 a month. Now that compares to a situation of 1.4 million a month 3 or 4 years ago, and 300,000 for the last couple of years. So the picture is anything but rosy. And if you think of the quality of housing in the US, where properties are often just ripped down, you know, 400,000 a month is perhaps barely meeting replacements. In terms of statistics, I think the most important thing to do is not to look or listen to anything coming out of the National Association of Realtors, because they are totally conflicted and, even more to my view, completely dishonest. But the only regular statistics I see that are interesting are the Case-Shiller reports, which are of quality. They cover the top 20 American cities. And Professor Shiller is a very credible and honest person. And he recently himself was making comments that there was not a genuine recovery in the US real estate market. So the person who's actually, I'm not saying contrarian, but expressing a point of view that doesn't align with the vested interests of the Fed and the NAR is worth listening to.
All right, let's move along to another point on our agenda here, and this is a fascinating story that I must admit that I haven't been following at all, but just going from the headline, I'm both fascinated and really unsurprised. But we can take this, for example, from ZeroHedge.com, which had a post up earlier this week. Did JPM's CIO intentionally start the margin call avalanche that crushed Lehman? And as I say, I haven't been following this story or the ins and outs. Perhaps you can fill us in on what's going on here.
Well, I haven't followed the story too closely either, on the basis that when these things were said a year or 2 years ago, and by some more activist observers, you kind of say, well, it's a conspiracy theory, it's not possible. How could one major bank deliberately trigger the collapse of another? And it kind of does not compute in a normal world. However, as we are all discovering, Wall Street and Washington in no way resemble a normal world at all. But here what you have is a deposition made by Lehman's lawyers defending their interests in bankruptcy, where it is laid out in very clear terms, and although I've obviously not looked at all the backup documentation. I've read the relevant part of the deposition, where essentially what they claim is that at precisely the time when Lehman was in extreme serious difficulties, and the leaders of the major banks were sitting to meet and discuss the future together with the Treasury and the Fed, two staggeringly large margin calls, which is basically when someone is overexposed in a position, the bank comes back and asks for further collateral. Two margin calls of $5 billion each were made against Lehman at the most critical period of these events. And that is an amount of money in those circumstances where it is impossible to imagine that the highest levels of all these banks and the government and the Fed were fully aware of what was going on. And these calls went ahead. And it brought effectively Lehman to its knees because, on the one hand, they had either to give up their liquidity immediately or face being excluded from the market by JP Morgan, which is, practically the biggest bank with the most political backing in the US. So at a time like that, for something like that to happen is just absolutely staggering. And the only conclusion, it must have been done with the full knowledge of those who were surrounding the events at the time. Now, interestingly enough, the person who is directly involved in this is none other than Mr. Bruno Ischko, who is otherwise known as the London Whale, where he was taking $100 billion positions where JP Morgan have reported in the last 12 months losses, if I recall correctly, about $6 billion. So he is obviously a man who likes big numbers. And, one can only try and link the two events and say, well, why was the punishment for losing $6 billion so modest? And perhaps we should look back a couple of years to favors done to Goldman Sachs and JP Morgan in bringing down Lehman. Now, that you can call a conspiracy theory, certainly. But applying logic to a situation which I originally thought was, perhaps a conspiracy theory or just bad blood, it's more or less the only conclusion you can come to. Now, that basically tells you that the level of criminality going on in the US financial markets is beyond all belief. And it actually reinforces one of the theories I have, that this is probably why UBS and other banks are scuttling for cover and getting away from New York before they fall victim to the next coordinated attack.
Well, at the risk of adding speculation to speculation here, what would, at least theoretically or potentially, be the point of bringing down another bank? Just spell out the implications of that for people out there who might not understand why a bank would be interested in bringing down another.
Well, I think that from the point of view of banks like JP Morgan and Goldman, Lehman was a significant competitor. So it's nice to say, all right, well, we get rid of a competitor, if that's what they did. However, the more alarming thing is that they would have been absolutely certain that the collapse of Lehman would trigger the most massive financial panic the world has ever seen. It's the biggest banking and financial and US bankruptcy in history. So these guys knew that they were playing with history when they did it. And then one has to say, well, was the takedown done to take Lehman down or to create the conditions for a major crisis? And that really is the ultimate question to which I do not have an answer.
None of us do, but I mean, we can certainly look at what happened in the wake of this crisis and really the trillions of dollars that have been shunted off into the financial sector in order to cover up the sins that have been exposed because of this popping of the bubble and all of this. So again, it is speculation on speculation, but it certainly adds up to something much, much, much more fundamentally worrying than we're often being told about in the financial media generally. But let's move on. I wanted to bring up something that we talked about last time in our last month conversation, where we talked about the initiatives that are taking place in various different countries to try to repatriate, or at the very least account for central bank gold holdings. And in Switzerland, there's a citizen-led initiative along those lines that we were talking about last month. Perhaps you can update us as to the latest on that.
Yeah, this is an extremely important movement. Until 2 or 3 years ago, the gold holdings of the Swiss National Bank represented well over 20% of the total bank assets, even with the lower value of gold at that particular time. So there was a solid backing. Now the citizens have been looking at what's going on with Germany and the other countries where they're trying to recover these assets, the gold from different from different central banks. And they have started a citizens' initiative where basically you can organize a referendum on the subject if you get more than 100,000 votes in the country. So any listeners in Switzerland, I very strongly encourage you to get hold of one of these forms and sign the petition. The due date for it, if I remember correctly, is the 20th of March. And if that is the case, then there will be a referendum on this subject, which basically says that the gold must be repatriated and that the gold reserves must always be a certain significant percentage of the total balance sheet of the Swiss National Bank. Now, today, with the enormous expansion of the Swiss National Bank balance sheet to over $500 billion, which is almost 1 year's GDP, then this money printing in Switzerland completely dwarfs the money printing in the US, because the total balance sheet of the Fed is 3 trillion in a 16 trillion economy. In Switzerland, with a 600 billion economy, we already have 500 billion on paper and government bonds of other countries on our balance sheet. So this is a major issue. And it shows that the citizens can, in the Swiss Republic, which is very similar to the federal system in America. However, the difference is in Switzerland it actually works. The citizen can still have his voice heard and apply pressure. And I very much hope that this works and it puts an end to this nonsense of never-ending money printing.
Let's certainly hope so. Do you have any sense of how close you might be to reaching that 100,000 person mark?
I think there's a fairly good chance. I mean, they had a first count where there were more than 100,000, but I think they'd one or two over-enthusiastic people who maybe signed twice. So it was put back to the drawing board. But this time I think there was a concerted effort to get the 100,000. And with every day that passes, and you look at all the uncertainty that's building up around, the canny, level-headed Swiss is going to say this is in my interest, that our assets are in our own country, under our own control, and that this money printing stops. It is in, I hate to say sophisticated circles, but in informed circles, probably the better word. The asset managers, the banks, professional people, quite a lot. But the Swiss, they are good, common sense people all the way down. Whether they're working in a factory or still on the farms, these are not stupid people, and they know what's in their interest, and they've made a success out of managing their lives and in a way to pursue their interests pretty well over the last several hundred years. So I'm very optimistic that this message will pass.
Well, I'm sure that the Swiss people don't need me to tell them this, but I certainly hope that they're appreciative of living in a place where there are still citizen-led initiatives that result in referendums and actual changes in government policy, which is, unfortunately, such a rare event in this day and age. So I hope people do take advantage of this, and we'll keep our eye on that, and hopefully we'll get an update as when and if that goes ahead, and that could of course have knock-on effects on gold prices generally. All right, we have covered the waterfront, literally and figuratively speaking, here in a lot of different spheres. Anything else you'd like to add to this conversation?
Well, I think there's one thing I'd like to add, which really follows on from what you just said, and I was delighted to see what Rand Paul has been doing over the last 24 hours. His filibuster in the Senate is a wonderful demonstration that there are still people in America who believe in freedom, who believe in their country, and who believe that executive power should be curtailed. It is tragic that the point at which this comes to the fore is only when the American citizens realize that their president can have them killed by remote control in their own country at any time without any form of trial and without any form of justification other than the fact, well, I didn't like the color of his eyes. So well done, Rand Paul, and I hope Americans rally around him and wake up and realize that they have to defend their own country's rights as well.
And since this is news that is really hot off the press, I just want to stress to people out there listening that this is an issue that is going to be twisted into the left-right spectrum, and people are going to fall along those partisan lines. So before that happens, please get the people and friends around you to look at the issue for what it is and not for who's declaring this or what side of the political aisle they're on. This is not a left and right issue. This is about freedom and human decency. And so, yes, absolutely, we have to stand with anyone who is doing that type of action and to at least do something to put themselves in the way of this increasing mechanistic tyranny. All right, some very important information in today's conversation, as always, David. So let's direct people back to your website if they're interested to find out more about you and your work.
Yes, of course. My website is the genevabusinessinsider.blogspot.com, and there's a link from that to my business website. You'll see the range of services I provide, and if what I've said is of interest, I'm happy to correspond with you, and if I can help you in a business sense as well, I'd be only too pleased to do so. Thank you very much.
Excellent. Well, Geneva Business Insider, indeed. We've gotten a lot of information this month, so I'm looking forward to next month already. Thank you again for your time.
Thanks to you also. Have a good day.